I'm joined now by Roger Holmes. He's a former CEO of Marks Spencer and is now Managing Director of Change Capital Partners. Joins me in the studio now. Roger, good to see you again. So we were just discussing these latest Sainsbury's figures, and it shows what a difficult market we're in right now when 2.1% in terms of sales is a measure of success, as you say.
Yeah, absolutely. I think, well, Justin and the team at Sainsbury's have been doing a good job for some time, and I think they can be proud of these results, and they're obviously delivered a set of initiatives that their customers have responded to. But there you have 2.1% success, and we were hearing earlier from, say, Morrison's 0.7% disappointing, and that is the margin of success and failure in a market that is undoubtedly very tough.
Yeah, not a great difference, but as you say, Morrison's, a smaller competitor, reporting earlier on this week slower sales growth. Just wanted to then take a look at this chart. These are shares of Sainsbury's, and just taking a look at how they fared against their peers, losing ground in the past 12 months. You can see that Tesco has been fairly steady. Tesco, the line in red there. Morrison's has been the standout. You can see the yellow line there. I mean, is this how you see it panning out in the year ahead? Because I know that you talk about companies with an international presence having an advantage, but of course Morrison's have done something very interesting in terms of diversifying in this country.
Yeah. No, I think you've got a tremendous fight amongst those four with a real power struggle, and but you know, there's a domestic game to play, but also an international one. I think that's part, perhaps, of Tesco's challenge, and they are a huge company, very successful, but they're having to manage that fight at home with making sure they take advantage of the international growth opportunities, and those are not easy. Some will work well, and as they're finding in the States, some are tougher nuts to crack.
Are they finding, is competition getting tough for Tesco's abroad?
Well, international, we talk a lot about it because there's a growth opportunity, it's phenomenal, and the brick markets and all of those opportunities, but you don't have to look too far back in history to find that it's been a graveyard for retailers. You know, Walmart, fantastically successful with Asda in the UK, had to pull out of Germany. Carrefour, equally great in some markets, had to pull out in others. So it's not something that you can take lightly. And when we work with companies, it's something we're very respectful of the challenges of getting international.
Be cautious as well, you're saying, of that international presence, because it's an added layer of complexity.
Complexity and challenge,
if you like, for the business. Let's focus there on your speciality, M&S, looking at some of their latest trading figures over the Christmas period. Not a great performance in terms of sales of women's clothing. Home furnishing also went down, and that's over the Christmas period, right? Where things are supposed to go well. Doesn't bode well for 2012, does it?
Well, I'm always cautious about being a commentator on M&S, but you know, I don't suppose with the warm autumn weather that it was a particularly easy selling clothes to the M&S customer, who tends to be more functional rather than sort of fashion orientated. But nevertheless, you know, you have to put the weather aside. The business has to offer something to its customers. If some of the initiatives that we did at that time, Simply Food, segmentation of clothing, new brands like Purina and Blue Harbour can play a role, you know, no one will be happier than us who were there at the time. But you know, it's a new team with Mark. They need to come forward with their agenda. I'm sure they will, and you know, from our part, certainly wish them well.
You mentioned Simply Food. M&S gets almost half its revenue, doesn't it, from food? And that was one area that did extremely well in this period. We're just looking at a chart there of the share price over the last 12 months, but it was there just a second ago. I mean, is that enough to restore some level of investor confidence in M&S shares? This is one area that's been particularly strong.
Well, it's the strength of the business to have a number of different divisions that you can work with, and certainly in food they've have got a great business, but I'm sure for the long-term success of the business they will want to grow on multiple fronts, and that's the challenge and opportunity that Mark and the team will need to respond to.
If we look at Debenhams then, M&S competitor, they had stronger than expected Christmas trading statement as well, holiday sales beating analyst estimates. But again, we're talking about a period where sales do traditionally rise, don't they, the Christmas period. I'm just wondering your outlook for these guys, these retailers in general, for the year ahead. Do they have to brace themselves for slack profit growth?
I think everyone is looking forward to a challenging situation. We did see that December sales have been relatively strong. You've seen a number of that. In fact, in some ways you'd think, well, actually, is this rather better than we were expecting? We were up against some snow-related difficult times last year. There has definitely been a slow start to the season with some of the weather, and so I think the boost in December was not unsurprising. I think also you'll find in the reporting season, we're only just partway through it, you tend to have the bad news early because people with profit warnings have to come forward, and now you begin to see some of the better, more balanced results through that. But having said that, I think we think it is going to be very tough for next year. There are elements which are going to be more helpful. Things like inflationary pressures are coming down, the squeeze on consumer expenditure, perhaps a little less.
Commodity costs?
Some of the commodity pressures that were huge last year on some retailers, particularly in clothing, those are big. In fact, in some areas like cotton, they've gone in reverse. The cotton prices peaked and have begun to come down. So at one level, I'm sure a number of retailers would have hoped that 2012 was going to be a little easier than 2011. But I think most recently the whole euro crisis has really damped down confidence, and we can see not only in the UK but when we look more broadly across our investments in France, Germany and Italy, that anxiety about the Eurozone is probably balancing the two.
I was going to ask you if the UK retailers are in a better position than their European counterparts, but your investments or the returns that you're seeing say no?
Well, actually, we'd rather, I mean, we're quite happy that we have two investments in Germany, say. I think it's a much more robust economy. But even then, I mean, the growth in the clothing market, say, was still flat in Germany this year. And so it's not, you can't rely on that. You've really got to find companies that can succeed within what is going to be a flat and difficult market.
Thanks very much indeed, Roger Holmes. Always good to have you on, Managing Director at Change Capital Partners.